Most people don't realize this yet. But one policy change in the US could bring trillions of dollars into crypto. And it's happening right now. The US Department of Labor has just proposed a new rule that could allow 401k retirement plans to invest in assets like Bitcoin and other cryptocurrencies. Now, at first glance, that might not sound like a big deal. But when you understand the scale of this, it changes everything. We're talking about a retirement market worth over $48 trillion. And even if a tiny percentage of that starts flowing into crypto, that's billions, potentially hundreds of billions, entering the market over time. Now here's what's actually changing. This rule doesn't force anyone to invest in crypto. Instead, it removes barriers that have been holding institutions back. For years, retirement plan managers were hesitant to include crypto because of legal risk. But now, under this proposal, crypto is being treated more like any other asset class, meaning fiduciaries just need to evaluate it based on risk, fees, and performance. So this is less about approving crypto, and more about opening the door for it. And this is where it gets interesting, because historically, the biggest moves in crypto don't come from retail. They come from institutional capital. We saw that with ETFs. We saw that with corporate Bitcoin adoption. And now, we could be looking at retirement money entering the space. Now, to be clear, this isn't happening overnight. There's still a public comment period, and even if the rule passes, adoption will likely be gradual, but the direction is what matters, because once these systems are in place, it becomes much easier for large amounts of capital to move into crypto over time. And this is exactly the type of phase where early positioning starts to matter, because while most people are focused on short-term price moves, the real opportunity usually forms before the capital arrives. Now, while I was looking into this, I started digging into a project that's been getting more attention recently, Bitcoin Hyper. And again, not financial advice. But I went through their site and started looking at the white paper to understand what they're building. From what I'm seeing, the focus seems to be on improving speed, scalability, and making Bitcoin more usable for real-world applications. Which is important, because if institutional money starts flowing into crypto, infrastructure becomes a huge part of the conversation. And projects that are positioned around that narrative tend to get attention early. Another thing I look for is visibility. And Bitcoin Hyper has already been getting coverage across multiple crypto platforms, which usually signals growing awareness. So it's one of those early-stage setups where people start paying attention before the broader market catches on. Now, if you are exploring pre-sales like this, one thing I'll say, and this is just from experience, is that how you buy matters more than most people think. A lot of people default to Ethereum and end up paying higher gas fees. That's why more users are starting to use networks like Solana when possible, just because transactions are faster and significantly cheaper. And using something like the best wallet app makes the whole process easier. You can manage different assets, swap between chains, and move into pre-sales without dealing with a bunch of complicated steps. It just simplifies everything, especially when timing matters. But zooming out, this is the bigger picture. We're starting to see the financial system slowly open up to crypto at a structural level. Not just retail, not just hype, but actual integration into retirement systems. And if even a small portion of that capital eventually flows in, it could have a massive impact on the market. Not financial advice. But this is one of those shifts you want to be aware of early. If you want more updates like this, make sure to like and subscribe, and I'll keep breaking it down in real time.